evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday, and we're at the 2nd of December, 2021 at 5:35 p.m. Central Time. Got to tell you, a heck of a rally today. 700 points at one point in the Dow, finished up 600 and some odd higher. Powerful day, but the chart action still isn't impressed. We did so much damage recently on these charts that rallies are likely good, hard ones. Today wasn't hard enough. I know that sounds funny, but I think a bit further in this market, you're going to attract the short seller. He'll come at you in the market. I'll show you why in a minute. You have to admit that we keep hearing inflation, inflation, inflation. And gold, I see those ads with that beautiful girl telling you gold's this wonderful investment all over financial TV. Hasn't been so wonderful. Not really doing all that well, nor is Bitcoin right now. You know, Bitcoin was a $70,000 instrument not too far ago. It's $56,825 right now. Another thing that's occurring, we keep hearing that the Fed's going to tighten a taper and that interest rates are going to go up next year. Yet, we have fallen back in the bond market and the 10-year note, I'll stay on that one, from 165 back to the 144, 146 level and just sort of hanging there. Certainly not advancing big. Then you get OPEC. OPEC comes out today, and it was a coin flip. The one thing they did today, smartly, they neutered, if you will, the U.S., and its allies, and they said, keep your oil. You don't have to take it out of your strategic reserves. We'll give you the other 400,000 barrels a day oil. We'll keep it going that much more in December, and we'll throw an additional 400,000 on that. Many analysts are now coming out saying that they doubt that OPEC has the power to keep doing what they want as they're starting to run to the point of diminished returns. In other words, they can't produce what they're promising to produce. That'll be interesting if that is in fact the case. You know that we're being curtailed in America without the pipelines from Canada, and you know that we're also being curtailed because the Biden administration, its wisdom, doesn't want federal lands or anything like that to be drilled on. So we'd rather give the money to OPEC. And of course, you've got J.P. Morgan, Goldman Sachs, and others coming out saying that crude oil could be as high as $120 next year. I'm not saying that. That's what they're saying. Interesting is all that I could say. So what we do with the marketplace, in my opinion, is we have to take a look and try to figure out where's this all fit into everything. So when you come to the Dow on the weekly chart, it's such a different chart than the daily. The weekly chart is still saying, come on down, let me be a buyer at 45.16, because each time you've come down to that number recently, the market has turned away and produced nice results. The daily chart looks completely different. The daily chart is in the state of, if you will, a collapse that went into the marketplace. You've got a pattern of lower highs, lower lows. As I said, you had a very nice bounce today. You were up 67 points. Yesterday, you were down 57. So there's a mania here, too much risk for a lot of traders to want to step into markets like that, whereas other traders look at it, oh, look at all that volatility. How do I catch 10 points, 20 points of that? There's something for everybody in this. When I look at the chart, the market's having trouble getting back to that, and we see it, the 100-day average. But on the way back up, I think the willing sellers will be probably there around the 46 level. Now, don't get me wrong. I'm a money manager as well as a trader in the sense of my analysis. And when you're doing that, if you had a stop over the most recent high of 47.17, it's very difficult to say, okay, let's go short at 46 and put a stop over that high. That becomes an awful lot of risk. That's my point. When I look at the Bollinger Band, the market's trying to get away from hitting it every day. Now, Bollinger Bands act as a support because the algorithm is designed to keep the market trading within the bands, the top and bottom band, 95% of the time. I've come up with techniques to teach you even beyond that what they are. I change my slow stochastics from a simple arithmetic formula to another one, and I think I've come up with something neat in the slow stochastic to blend it with that. Right now you have an oversold market that's hit that number. If it were embedded, it'd be one thing. Embed means it gets down, it lays down, it goes sideways, or it goes sideways to the upside, and that's when you get these type of rallies. To the downside, it'd be bearish. You're not getting that. So somewhere in this area, I've mentioned this to you each day, I think you're finding the support between the 100 and the lower Bollinger Band. But no, I cannot turn to you and say, oh, this market looks ripe. That was it, and it's ready to just pick up and run. The same thing goes in the NASDAQ. You've come down, you've hit the lower band. I teach in my enhanced Bollinger Band course that the first time you hit a Bollinger Band, upside, downside, it's the areas you take money off the table, assuming that when you're over the 18-day average, you have a bullish bias. When you're under it, you have a bearish bias. Does your trading fit in with it? It's really pretty simple. I teach this all in my charting course in terms of understanding bias, momentum, objectives. And then, of course, you've got to tie money management in. If you don't, you get yourself into trouble. So as I view this chart, very oversold, has hit downside targets. Hitting them is not a sign, oh, let's go up. It is a sign that you hit the downside target, and being oversold, maybe it's your hands in your pocket time. In the Dow, you went down to the 200-day average. Now, at first, I did tell you, and I said this to you as it was occurring, that I thought on the first challenges you were going to hold the 100-day average and the lower Bollinger Band. Bearish play. You've had lower highs, lower lows, oversold, and that's where I thought the pros were coming out. Then you started doing this, and I had to come out and say, and I did it. And I said, this November 30th, by the way, well, if it keeps going down, maybe you're going to make a run to that lower 200-day average of closes. Bingo. Market went down there. Now it's finding a way to bounce away. The first resistance point is likely, the word is likely, going to be the 35,000 level, which is the 100-day average, and if it pops further than the 18, and you're very oversold. Oversold tells me you're not attracting new selling, but it does not say you're getting new buyers. In the Russell, same type of thinking, or is it? Well, I want you to look. These numbers in the Russell are all under 20 for several days now. Take a look. This goes back, the first one of these where they were under 20 was Tuesday. So you have Tuesday, Wednesday, Thursday. You've got 3 days in a row. You're embedded. So for today, if you get a big rally, I think the pros will go short this market right into this level of 2251 to 55. And if the red line of the slow stochastic closes over 21, I think they'll come out of the market. I don't think they'll use price. I think they'll use momentum as their target with that, and they'll look for another break to the Bollinger Band. In the VIX, you're having trouble here at the upper band, but the VIX changed its character. In the past, when the VIX would get over the upper Bollinger Band, it would get over and pull right back to the 18-day average. I can go on this chart and show this to you over and over and over in different areas where it did it. Even here. This pattern is very different. You get over, you never made it back there. Could this be where the market's taking on a different character altogether, and suddenly the VIX is going to move away from trading in a 15 series of numbers to a higher set, which means more volatility staying in the marketplace? Could be just what it's doing. In the 30-year bond, we keep hearing that the interest rates are going up. Okay, but you do understand the higher futures go, the lower real rates are going. So as you've come up here to that number, you're fighting a pretty serious battle at it. I do think the pros came out. It's the flip-flop of stocks. You're overbought, not embedding. You're up to that number. I think they said enough's enough. When I come over and take a look at the 10-year, that happened 3 days ago. and you're still overbought in an uptrend. I don't think you're attracting new money to buy the market when you're overbought, and you certainly are in an uptrend. In the dollar index, you have been in a downtrend in the swing line, but the bias has been up. What do I mean by bias? Notice how the market has stayed over the 18-day average. What I teach is that you need to have a filter on different indicators. It's like a checklist. Are you getting buy signals, sell signals that you believe in? When I get a sell signal that is over an 18-day average, I view it as a contra-trend break in the market about to happen. Maybe it'll get down to this number, maybe not. It's certainly not a buy, but it's not a sale because it's over that number. In the eurocurrency, it's the flip-flop of the dollar. It's making its challenge of the 18-day average of closes. It's got the trend up, but the bias down. Then when you come over to the British pound, you lost the embedded reading. Now, this is what happens when you have an embedded reading. The market normally goes into a pattern where it's down, and one of the potential goals, and the word is potential goal, is the lower Bollinger Band. There's window envelopes too, but I don't show them here. I show them in my subscriber videos because they're so important, and it's like trading this way without them on your chart. I want to be honest. But in any case, I look at that, and when you do hit it, I tell traders, you've got to take money off the table. You're waiting for bounces, and if you lose the embedded reading with the red line closing over 21, you got to be out of short positions. You've lost the downside momentum. That doesn't mean it can't regroup down the road, but it's just oversold right now. Any numbers under 30 are oversold. In Bitcoin, you lost the embedded reading. You've stalled. You've got a trend down and bias down, but when you lose that, you don't attract new selling money. That's what I teach. Does it always work? Nothing always works, but you're looking for the high percentages. Then the differential here of the Brent and WTI. Well, the market's got to digest just what happened. We're getting all this oil from OPEC Plus. They put a new caveat on, which they've always had in reality, that market conditions. Of course it's market conditions. If COVID through the Omicron gets real bad, they want the ability, hey, maybe they shouldn't put so much oil out on the market. They'll back away from that. They have the right to do that. But when I said they neutered everybody, they did. Instead of the U.S. and its allies going, well, we're going to fight you back, what they said is, guys, don't get so ruffled. We're selling you the oil. And I'm talking, they're selling it to the China, they're selling to India. It goes on. And we understand your concern. We're going to still keep doing that. Well, now you don't have to release that oil. Who's controlling the market? It was nice that we all roared up and they listened, but they're controlling the market for the moment. In Brent, you can see how the market keeps hitting the lower band and bouncing. Are we going to embed? Well, the market's not trying to. So got to keep your eye on it. This was an area that you don't want to be the last guy standing on that bear side of the market when you're not embedding. Got to be very careful. I think it's a bear market that the easy money was made in, past tense, and I think you're waiting for other setups there. I feel the same thing in the heating oil. You're losing the embedded reading in all these. It's time to pick up your chips if you've been a bear, in my opinion, and say maybe there's a better place to play. That's, of course, up to you. And nat gas, which was a darling, isn't much of a darling anymore. It appears there's plenty of it around. Winter has not been rough so far this December in the United States, and you're seeing that in prices, which instead of being up here at $6.50, have cut themselves dramatically. Now, are we going to get the benefit of that in our energy bills for the winter? I'm praying. I want to remind you, every now and then I'll hold a course sale. And I've done it for you in my research. Now, let me explain what I mean by that. I'm giving my charting course away free. It's a $249.95 value. Or the Enhanced Bollinger Band course, another good value, where I teach you another level of Bollinger Bands with any one-year subscription to any level of my research. The research starts at $156 a year. You decide what you'd want to do from there. In order to read about it and find out more, all you got to do is move your cursor up at any point here on this video, and you'll see the icon appear. Click on it, and that's where you buy it. This all ends on Friday. So if you want to take advantage, this is the time to do it. If you have questions about it, just call my staff. They'll be happy to answer it. Otherwise, you go right through here. Take advantage. I'm Ira Epstein. You have a great day.